Hello and welcome to this week's Market Focus. Well, it's been another interesting week previously with a very strong finish to the week with the Dow and so forth. And again, over the weekend, a lot of debating and a lot of talking around the table with Europe's big nations. Shares have literally, the markets have gone off to a fairly decent start. We've just tailed off slightly now. The FTSE All-World Index is currently up 0.7%. Commodities are further, and yields on US Treasuries are inching higher as fewer investors are seeking bolt holes. European bourses indices have opened up on the front foot, tracking an upbeat performance in Asia, and the FTSE Euro First 300 advanced to 0.3%. S&P futures point to Wall Street starting the session with a gain of 0.4%, and this would take the benchmark to an 11-week high to add to the 14-session rally that has seen the index surge to nearly 13% in previous weeks gone by. And the rebound has been predicted on three factors: a well-received US earnings season, as we've seen, which is certainly given some support to sentiment. And as I literally just touched upon earlier, the issues with Europe are still really headline news, as the case over here, and it's a case of Germany and France, which have turned to Italy to demand further action to boost growth and reduce its huge debt. Obviously, as leaders of the Eurozone struggle to agree of how to boost the recovery fund to stop the issues with sovereign debt, markets are now looking to Wednesday as a deadline ensues. They were looking maybe things could be settled during the weekend, but that's actually been extended towards Wednesday. So the agony prolongs, really. See how things are really going off. And obviously on Sunday night, the 17 Eurozone leaders debated without reaching any conclusion on any potential models of how to really expand the financial firepower of the 400 billion European Financial Stability Facility. So we look to Wednesday really to see how things can really ensue and how things would look forward. I'll quickly move on to just seeing how the outlook of this week looks. So we'll look at the economic outlook, see what sort of data's coming out, and I mean this week's fundamental data we'll have. Obviously, it's going to be more of a deeper insight into the health of the U.S. economy this week. And publication on Thursday, if we just go here, you guys certainly want to keep an eye out on the preliminary reading on the GDP figure for the third quarter. Economists expect a growth of 2.9% for the period, up from 1.3% in the previous quarter. This is helped by improved car sales and supply chain nears a recovery from disruptions. This is caused by Japan's devastating earthquake back in March. So, we'll see how the GDP really comes out and, whether that will really add a bit more fuel to this market and whether we can increase a bit further. U.S. personal income and spending for September also, that is due to come out on Friday, and this will give further guidance to the prospects of sustained and improving recovery. And personal income should rise about 0.4%, recovering from a fall of 0.1% in August. So we'll see how that really ensues on Friday. And unemployment cost index for the third quarter is due out also on Friday, and it's set to reflect a subdued wage growth for the public and private sectors here in the US. So another one, and just to cap the week off, it seems like most of the top end of data is going to be coming out on Thursday and Friday. We'll be finishing off with the University of Michigan's consumer sentiment for October, which is expected to move an improving mood, really, a revised figure of around about 50 58.2 compared to the 57 point and a half that came out last time. So again, the Michigan figure is a fairly decent figure that comes out. And on the other end of the pond, here in the UK and Europe, we've got consumer confidence, which is also out on Friday, and it's expected to remain -3%, same as September. So the continuous Eurozone crisis and worries will obviously looking to overshadow a cast over the public spending on high street. And just to finish off the data, we've got UK's current account deficit for the second quarter, and this is actually released earlier in the week on Tuesday. So another one we really need to keep a quick look out, and is expected to be around about 7.3 billion. So obviously that's the data that's going to be released, and on top of that, obviously Wednesday is going to be a key day for any signals, any news coming out on any of these pending crisis that's happening in Europe. So keep your eyes and ears about you, obviously, when you're out trading. So Wednesday is going to be a key day. I'll quickly move on to any since we are in earnings season. I'll just move on to the earnings that were ensued. Not too many this week as last week, but more of an oil gathering of earnings this week. We've got some of the largest oil companies reporting third quarter earnings this week. It kicks off by BP, the European trading session, and that will be on Tuesday. We'll see. It's expected to come. BP's earnings are expected to come out 4.9 billion, a decline of 11% for the same period. So we'll see how that really comes out. I mean, BP really does make their FTSE move. So keep an eye on how that comes out. Royal Shell, another one of Europe's largest international oil companies, they're due to release on Thursday. Their reported net income is of 6.5 billion, up from 4.9, should I say, from the third quarter in 2010. And I mean, that's the early part. And we've got Deutsche Bank coming in of earnings. UBS, they'll be coming in on Tuesday also. And if we just move down, I think it's pretty light. And coming on Thursday, in terms of UK earnings, we've got AstraZeneca on Thursday. I know a lot of our clients like to trade AstraZeneca, and we've got a new drug coming out, and we'll see how that's really performed in the last quarter results. And that really is it in terms of any earnings that are coming out. And like I say, I think the main attention is going to be really focused towards Wednesday, and just to see how Mr. Sarkozy and Angela Merkel come to some sort of agreement. Obviously, all of Europe is really on tenterhooks. One sort of feels that once potentially some sort of dialogue and some sort of agreement is in place, the markets will then take a seat back. A lot of these things are priced in already, and maybe you will be starting to look at more of the important economic data that's coming out of the US and Europe. So obviously, before you're trading, keep an eye out on what's coming out. And most of this is available in the Euro Two-Way Spreads website if you look at the diary section there. So that's it really from this week's fundamental point of view, and I'll bid you a good trading week. Thank you very much.